Good morning. It is Monday, April 7th. I won't put in the dramatic music at the beginning like I did over the weekend. I did have a weekend podcast and it's out there. It is what it is. I don't think a lot has changed. I did put in dramatic music at the beginning of this one. It's on Substack. It's on Spotify. I'm not going to go over a bunch of other things. Just know news is coming in faster than I can actually do podcasts. I am not a news source, but I am somebody who will post things. So if you want, follow me on Twitter. That's the best and quickest place to get things. I know there's some political hatred for Elon Musk, and I'm not immune to it. I am not a fan of his, but I do like Twitter. And you know, I've said this to many friends before. If this were 1776, I would not be the guy throwing tea over the side of the boat. So I'm not a guy who's necessarily going to, if I like a product and I like something for political views, I am not going to hate somebody. It is what it is. I mean, Elon's in there. I don't think he should be doing what he's doing, but I love Twitter. And if you don't like Twitter, I'm on Substack. And Substack has this note sections that is just like Twitter. And I post just as much stuff there as I do on Twitter. So either place you can do it. Just know that news is coming in faster than I can publish it. And just minutes ago, Trump posted on Truth Social. It is what it is. I mean, I said it during the weekend podcast. He's going to blame Jerome Powell. And he's already started because he said there's no inflation. There is inflation. And if this continues, we're going to see. Don't expect anything to come out of the White House that's going to save us, because I think this plan is in place. I don't think they're absolutely telling the truth. If you read between the lines, what they're doing is they're trying to reduce the national deficit by crashing the world markets, and they're hoping that it doesn't do that. But I can't argue with some of the things that they do. I can't argue with the way it's implemented, the messaging that you're sending out to the American people, which is just absolute lies. And just the implementation and messaging. I think that's the problem. What they're doing, Congress is the one that should be doing stuff like this. They can't do it. And that's why you're not hearing from Republicans, about craziness. The only people who are speaking out about it are the people who want to run for president the next term. So let's just get on with it. Get politics aside. The reality of this situation is you're in a bad place. Now, is it a bad place for the next 6 years, 10 years, 2 years, maybe a month, whatever it is? The market is going to decide. So you're going to have to decide some things. So I'm going to go over later in this podcast what I would do in my I should say, in times like these, because this is not unique. Understand, the only unique situation that has happened is this is a man-made, and it's the dumbest recession ever. I got this text. This year has felt surreal. An elected president driving the economy and markets down after launching a meme coin. It is the dumbest recession ever. It's not necessary. So you have to know how to react in this market, because they're playing seesaw right now. And one side of the seesaw, there's a 1,000-foot cliff. And if you don't pick that person back up in time, they're going over a cliff. So, Leon Cooperman, one of my favorite billionaires. Go and Google who he is, okay? I love him. I am sad to see how much he's aged over the last 2 years, because he just wasn't his top self this morning. But his message on CNBC this morning, and I love this, just be careful. Be careful. He thinks the president is forcing the economy into a recession. Typical recessions last 6 to 8 months, and nothing can stop it. That's not meant to tell you to sell. It's not meant to tell you to be scared. Just be careful. Understand your goals, understand your timeline, and understand your risk tolerance. Now, I'm going to go look at SPY because he brought things up. He brought up SPY. The S&P wants to be at a 17 multiple. Okay. It should be at a 15 during a recession. It wants to be at a 17. That would put the S&P at 4,600. Okay, we're going to look at a weekly chart right here. 4,600 on the S&P would mean 460 on SPY. Where's 460? Right at the 200-day right there. 466, 460. If that's the support line, okay, you're going back to last year, December of 2024. Okay? If that's holding. Again, in pre-market, where is SPY? 494. So he's telling you to be careful. He's not selling, and he made that very clear. I'm not selling. But if you expect Trump and his folks to actually come out, we have to solve our trade deficit. He's finally talking trade deficit. Finally. Because he's been talking tariffs. Again, the messaging is horrible. And I don't think you need to tackle your trade deficit, but that's the way he's doing it. It wasn't tariffs. It's not about tariffs. It's about trade deficit. So understand that's what he's doing. And he's digging in for the long haul. And Besson even said it. Besson had a mic drop moment. He said it's not a MAGA problem, so it's not a Make America Great Again problem. It's a MAG 7 problem. And he's out there on the talk circuit saying that 80% of the stock market is owned by 10% of the people, and that the other 90% aren't looking at the market every day. I think he's got a rude awakening for him when people's retirements start going down, because when he was asked about that on Meet the Press this weekend, he said, no, that's a false narrative. No, it's not a false narrative. Because as they took pensions away in this country, they started what's called 401ks. Okay. Not everybody understands that 401ks, you may be young. Your 401k, when you're 50, 60, and 70, it needs to be safe. And when an economy is intentionally tanked like it is this time, that 401k loses its money. And if you need that money, and you have to sell right now, it's a shame. Okay? And you're hearing right here, the plan, crash the stock market. Because the only people this affects are the people, he talks about people who are taking, that there's a wealth gap. And he said there are more people going to food banks. And also, at the same time, we have record European vacations from Americans. He's going after the people who are taking European vacations. Most likely, you're in the stock market to build wealth. He's going after that wealth. Just understand that's the administration's goal here. Doesn't mean sell out. Okay, later I'm going to go over what I would do. But understand the goal. We are in the 8th worst start to an S&P in history. Okay? The only other one, to 2020, you were down 23%. It was COVID. Trump has 2 of these in his administration. Trump has 2 in his administration. Okay? You're not seeing multiples of other people in this. 2008. And 2009, those were Obama. That was his first term. He was taking over during a financial crisis. But again, 2 terms, kind of interesting. The S&P's Thursday and Friday's routes among the largest trade 2-day declines in 40 years. This is why Cramer is talking about Black Monday. I want to urge everyone, make sure you have a plan, a process, and the tools that help you make decisions. Asking someone on the internet for help is okay. Asking somebody who may know more is okay. But asking questions like, should I, is not something anyone else other than a financial advisor can answer. Okay? Maybe you ask your rich uncle who knows a little bit about it, and he can guide you. When you say, should I? If there's somebody out there that you trust and you say, should I? And they give you advice, take it or leave it, because you're going to absorb that yourself. Okay. But make sure you have a plan and tools. myself and my buddy Steve, okay, we both retired right before COVID. And what did we do? We lost 40%. We were in that S&P top drop when we retired. We went out and we built the 4-hour algorithm in Trendspider. Okay? I left work January 31st, 2020, not expecting to ever go back to work again, started a podcast. Losing money that quickly made us develop a plan. It was the 4-hour algorithm in Trendspider. This has provided me a great resource during the downturn of 2022, where I was able to look at charts and look at the 4-hour algorithm and say, you know what? My Apple position right here, should I get out? It provided me a great resource. It's provided me a great resource over the last couple of months as well in order to make decisions. It takes emotions out of my trade. Make sure you have a tool like Trendspider, okay? Go and Google something that I want you to know about technical trading. Nothing good happens under the 200-day. That's a technical saying. Okay, if you go to a daily chart, and you don't need Trendspider for this, Apple has been under its 200-day when it crossed at 220. Okay, nothing good happens under the 200-day. Will it bounce back? Absolutely, it will bounce back. But understand, the trade war that we're in right now, it's not a tariff war, it's a trade war. If you bring manufacturing back to the U.S., your iPhone that now costs you $1,000 will go up to $3,500. Dan Ives has actually modeled that with suppliers. Okay, and when I look at the 4-hour algorithm here on Trendspider, I say, well, the algorithm has made me 31% in Apple. Buying and holding has made me 22% over the last 2 years. Am I okay with that? I want to listen. This is just like a news article that you would read for me. That's it. It's just like a news article for me. I take this information, I absorb it. This is even more important to me than a news article. But understand, you have to have these tools. Okay? The past 2 days, meaning, and this was written on the weekend from that article in right here. The past 2 days have been nothing short of historically bad. They have been the worse than 99.9% of other trading days since 1929. This was the 5th worst 2-day window for stocks since 1945. It's arguably the singular major drawdown resulting from a policy choice by the president. There is nothing other than a policy choice by the president. So again, tools you should have. Number 1, a chart. Just get a chart. It doesn't have to be Trendspider. If you want my 4-hour algorithm, you can get it by signing up for Trendspider. It's all here on Linktree. I will show you the price, because if you can't afford this price, don't worry about it. Go and get a regular chart. Go and get Webull. Go and get Thinkorswim. Go and get TradingView. I don't care what you do, but number 1, you need a chart. Just like a plumber or an electrician, you have a tool belt when you're managing a portfolio, and charts are one. Okay? This 4-hour algorithm guides me in, should I hold or sell? I sold Apple on Friday. I didn't sell out. I have sold at 260 in December. I sold at 240 in February. I sold at 220 when I saw this one got me out right here at 242, never got me back in. But what did I see? I saw on the daily it crossed at 220, sold at 220. Okay, and I sold at 195 on Friday. What's it trading for right now? 182. I sold quite a bit on Friday. Just didn't want to hold it. Again, with the multiple that it's at, with the growth that it has, with the Mag 7 doing as poorly as they do, I just said to myself, I want to sell it. And it was chart related. It wasn't anything fundamental wise. It was chart related. The number 2 tool that you want to have is a way to look at fundamentals. And if you can't afford it, I used FinViz for years. You can use Fidelity, your brokerage firm. I'm sure they have PE in there. I'm sure they have PEG ratios. And if they don't, get one. Because I know Webull has it. I know Robinhood probably has it. Okay? But get the tools. The one that I use is Seeking Alpha. I can go over here and I can pull up the quant and say, Apple's got a valuation of F. The quant says hold it. Okay, it's got growth of D because I just know it's not growing as well. See, on the revisions, the number one thing that you can do is momentum. And it's still down 22% in 3 months. Even though these are good, it's because the sector's doing so bad. That's the only reason that grade is good, is because the rest of the sector is doing that bad. Okay? I put out this weekend special. I think it's good. I think you should watch it. The notes are down below. I even included some crazy, dramatic music. But I think it's good. Again, I'm not going to go into it. Some of the stuff has changed. But I do think if you're listening to this one, you should absolutely listen to that one. This is not the kind of market, by the way, that you want to learn to trade in. I'm going to put it out there. If you haven't traded and you're thinking you're going to go and get a triple leveraged ETF on the VIX and you're going to go and trade it, do not do that. Okay? Do not do that. But if you have traded and you want these, yes, SVIXY is the one that I'm suggesting, because if we look at the VIX, it spiked to 50. It's at 48 right now. Look at the 5-day. Okay, when did this happen last? If you look at this 6-month chart, this August 5th, where is August 5th? We're going to have to do a 1 year to see August 5th. Look at that one. August 5th, that spiked to 60. Okay, even though it's not showing it, it spiked that 1 day to 60. You're at 50 right now. What happened? This one came down. So if you go and you look at SVIXY, it is a triple leveraged ETF. Do not take this lightly. Do not hold this for weeks. And if we go here and we look at August 5th, look at that. That's a 25% candle right there on that week. What do you have here? You have a 17% candle from last week. More than likely, something happens over the next 2 weeks and SVIXY takes a move up. It is just getting killed right now. Okay, what's the opposite of this? It's UVIXY. It's what I brought up last week. Okay, right now, UVIXY is up 10% in pre-market. It's at 44. If you had taken this trade last week and we say, okay, if we go up to 44 here, you're up 97%. In what? 9 days? 9 days since you took that trade. Okay, this one, you could have gotten out when you lost confirmation. These are trading tools. Okay, all over the world, you have circuit breakers kicking in. You have circuit breakers. This is governing by chaos at best. Don't expect Trump to do anything. Powell may have to do an emergency cut to stem markets, but Bessent will have to approve that, and they are not worried about the market. They've told you they're worried about the people in food banks, not the people who are taking European vacations. And more than likely, if you're trading stocks, you are one of the people that they are talking about taking European vacations, even if you haven't visited Europe in years. So here is I created a Trendspider strategy. You can import it into your setup. Okay, it's not great on the actual exit. Strategy performance 99.3%. Let's go look at it. It is called Liberation Day, and the reason, it's a weekly chart, and you would use it on something like QQQ. Okay, let's go over to QQQ, because if you look at this chart, I put this in there. We can look at this one and we can say, okay, the back testing started there. This was during COVID. Let's go to a weekly. I think, yeah, it's a weekly chart, so we should be able to look at this. It's a little bit laid out better. If I go, let's see, we're going to look here. VOO. We can do VOO. But I put the VOO. But QQQ is just as good. So you can see QQQ, it makes you 302% over the last 9 years. Okay, the last 9 years, because I went back to Trump's first term. It makes you 302%. Buying and holding makes you 322%. So you're better off buying and holding. But if you want to know when to get back in, this strategy may tell you, because it's had good times to get back in. There have been a couple of false breakouts where you bought and you held. If you're looking to get back in, this might be a good strategy. So again, import it into your Trendspider setup. I created this so that I can find a way back in. The 4-hour might not be that great of a way back in because it backtests 24 months and it makes you 45%. But I think you're going to have false breakouts on this. So I created that. So now let's go over what have I done in the past based on my age and scenarios like this. Black Monday, 1987. I was 17 years old. Yes, I had money in the market. The dot bomb, 2000. I was 30 years old. Yes, I had money in the market. Financial crisis, 2008. I was 38 years old. Yes, I had a tremendous amount of money and lost a tremendous amount of money. COVID, I had just retired. What did I do? During 2022, what did I do during that? Et cetera, et cetera. I'm going to take my age. So in my 20s, I took risk. Take risk. I would be buying, no questions asked, and I would white knuckle these losses. But buy smart stocks, buy VOO, buy QQQ, buy Berkshire, not companies that are YOLO. I would trade the YOLO companies, something like BBAI or IONQ that's not making money. Trade them. Find a strategy that works. Trade them. They can get killed. And then when you have halting of the stock market, you will get killed in that position. Trade it small. In my 30s, I would still be buying, absolutely. Look back 30 years. Let's go to SPY. Okay, I'm going to go to SPY and I'm going to go to a monthly chart. Okay, 30 years ago was 1995. Let's bring this back to 1995. Okay, 1994. Where were you in April 1995? The S&P was trading at 500. Okay, SPY was at 50. So in your 30s, I would absolutely still be buying. Even if you have downside, I would still be buying in your 30s. Okay, when I'm in my 40s, I want to look back 20 years. Okay, 20 years goes back to 2005. Where were you in April 2005? The S&P was at 119. Okay, still very good. You've never gotten to these levels in the on the monthly of the MACD. It's not a big deal if it comes down. Be smart about it. I think you can buy and hold in your 40s. I did. And that was crazy times. Again, you had COVID, you had all of this. 50s. I'm in my 50s. I'm less willing to white knuckle a very large portfolio and hold on to losers. I want to be more patient. I'm willing to sit it out. I'm not out of the market. I'm 40% cash. If I sit out for 30 days, I'm okay. The average recession takes 6 to 8 months to work itself out. I just don't have enough time to make it back. So I want to pull some investments out. And that includes, by the way, selling VOO. And if I need to buy back in within 30 days, I'm going to buy SPY. Okay? There are ways around this from a tax and a watershed moment, avoiding that thing. Not tax advice. And I want to make this clear. This is not tax advice. This is just what I'm doing. I can't give guidance for the people in their 60s and above. I'm not that old. But my parents are in their 80s. I have not sold a thing in their retirement account. They don't have brokerage. They just have retirement accounts. I should have been selling. I should have managed it better. Okay. But managing their portfolio, my portfolio, and the podcast, too much, too quick. They called me last night. If you were live on Substack with me last night, and if you're part of the newsletter crew and you got the alert that I was live last night, this one, within the first 5 minutes, you'll hear a panicked Mrs. Vaughn calling me. What are we going to do? What are we going to do? They're panicked. I'm trying to talk them into not selling out. They've sold out twice in their life. The first one was during the financial crisis. They made out like bandits. They sold out during that time and they got back in. They timed it perfectly. The second time they sold out was COVID. They didn't time it so well. So I told them last night, you're batting 500, which is still a great thing. But the next one determines if they're batting 350 or if they're batting 750. So understand you can take money out of cash and put it into high yielding places like VMFXX, and there's others. But just know, creating this weekly strategy is more about me getting back in than it is about me getting out. Okay? And VOO, remember, Trump, this is VOO, Trump War 1.0. When you get to the 200-day, nothing good happens under the 200-day, but it's a buying opportunity. You still have 7% to get on a weekly chart on VOO down to the 200-day. And the weekly MACD that you see, the weekly RSI, they're all stretched. 4 times since Trump was elected, the market had major downturns. If this continues to get the S&P back to the weekly 100-day, 200-day, it should be 200-day, you still have almost 8% to go down. But if you're in your 20s, 30s, or 40s, I'd absolutely be buying on the way down. Okay? America's CEOs, they're mysteriously quiet. I will tell you, in my high net worth group, I read it to the live audience. There's confusion in the boardroom. They weren't prepared for this. Nobody believed that this was going to happen. So they're confused in the boardroom. That's it. Now, this BBC article, Trump has turned his back on the foundation of U.S. economic might. The fallout will be messy. There are a couple of quotes that I want to quote from this, and I'm going to get this off the screen because the white is just killing my eyes. But there's a couple of quotes. In the hour before the press conference, the senior White House official explained it quite openly. These tariffs are customized to each country, calculated by the Council of Economic Advisors. Again, they're outlining everything. The model they use is based on the concept of trade deficit that we have is the sum of all unfair trade practices, the sum of all cheating. They are out there saying that we have been in a depression for the last 20 years, blah, blah, blah. They're feeding you lies. This is really important. According to White House, the act of selling more goods to the U.S. than the U.S. sells to you is by definition cheating and deserving of a tariff that is calculated to the correct to make that imbalance equal. That is not what they said they were doing. They said they were doing tariffs, but the calculation is just on trade deficit. Perhaps there is some substance to the theory that the real objective here is to weaken the dollar and lower U.S. borrowing costs. Absolutely. For now, the U.S. is checking out of the global trade system it created. It can continue without it, but the transition is going to be very messy. That's what's happening. And that's in that BBC article. I would read it. Okay? I'm with Kramer. This is Black Monday. The difference between now and 1987 is that critical circuit breakers could slow things down. You may get circuit breakers. Remember, there's a 7% drop, and then you get a halt for 30 minutes. Just go and Google circuit breakers. Okay? But I'm with Kramer. There's some shit going on here. This is a great Instagram. Realize sentiment is very political. I got messages from Trumpers saying, don't worry, everything's going to be fine. I got messages from my liberal friends. Holy shit, what the F is he doing? So understand, sentiment goes by political party, and the compound did it brilliantly. But if I sat you down 3 years ago, right after COVID, 3 years ago, think about that. 3 years ago, I sat you down and I said, you're going to have 3 years. Here's your returns. 27% plus, 24% plus, and 10% minus. But I'm not going to tell you the order of those years. Would you still be invested? If you would not sign up for that, you should have an advisor. You should not be trading in the market, because if I told you that there were 3 years, one down 10% and two up 27 and 24%, you should be paying somebody to manage your money. Consider it a gym membership, but make sure they aren't promising you something they can't deliver. You need to stay on top of your advisor. If you listen to this podcast, you know enough to keep them responsible. So personally, if somebody offered me that, I would say only one down year and it's only 10%. That's what I would think. The strategy that I tell people most is buy VOO, QQQ, and Berkshire and two other safe Vanguard ETFs. Find them. Make sure one is a bond ETF. But that's a nice, evenly divided portfolio. And even today, you could add to that portfolio and long-term you'd be okay. And Josh Brown here explains it brilliantly. You don't know what the next 3 years will be like. You also don't know what VOO and QQQ are going to do. You don't know if momentum or value is going to outperform. You don't know if utilities or energy or even tech is going to be the best place to be invested. Nobody does. Are bonds finally going to outperform the more market? I don't know. Nobody knows. But you can go and buy, use AI. Go and buy some bond ETFs that have outperformed the S&P from 2000 to 2020. And you can IUSB, ANGL, HYG, to outperform the market. Go and do your research. Again, go and do research. And if you want to laugh about tariffs, Des Bishop puts it great. Vietnam got a 46%. If there's one country that we should not be bombing again with a tariff, it's Vietnam. This was actually really, really funny. I mean, I'm telling you, it's hysterical. Hysterical. Amazon is now trading at 15 times operating cash flow, its lowest in history. Meanwhile, free cash flow is expected to grow 33% annually for the next 5 years. Can you tell me one reason why you shouldn't be incredibly well from here? Again, a recession doesn't mean that 5 years from now, it's not a great buy. Okay, it's still expensive. Go and look at it. Do your research. Again, I just went over. How can you use these tools? Here's Seeking Alpha. It tells me that it's a strong buy. The valuation's a D. But when I look at and look at the PE at 30, and I can chart this thing and say, let me select our metrics, and we'll go to valuation and we'll type in PE. We'll get rid of the price return and we'll say, update this. Okay, this is just the PE. Let's go to 10 years. Let's look at the PE for 10 years. Were you buying in 2016 when it was 1,000? Because you've done really well, but it's come down. So it's cheap. Doesn't mean it can't get cheaper, because it absolutely is. I wouldn't think that this would have gotten below 188. I thought that was clear support, because things are, you've got the AWS, you've got their new ad business, and you got the consumer business. Consumer business may drag everything down. We may not get expansion of the cloud business because you might have reduced spending from corporations. But it's a damn cheap stock. But could it get cheaper? Absolutely, it can get cheaper, because you're not even at the 200-day on the weekly. And during 2022, you came under it. Okay? It doesn't go under very often, but you're now under it. Well, you're not under it yet. At, let's see, 152, you'd be under it. In pre-market, you're at 166. Could be a great buying opportunity. It could be. Microsoft. This is the Weinstein stuff. Stage 1. accumulation, stage 2 advancing, stage 3 distribution, stage 4 declining. You are in stage 4. Would you buy it? Seems cheap. Again, historically, this one seems fine. Let's go to, by the way, MicroStrategy. I'm not bringing it up, but MicroStrategy said they lost on paper money. Buying Bitcoin at 120,000 and you lost money? Yeah, probably. But again, they're doing it for the long term. Now, Microsoft valuation, the PE at 28 seems okay. But their growth isn't as good as Amazon. Their growth is just 15%. Amazon's is much bigger. But Wall Street thinks that Microsoft is worth $503. Have they brought it down? No. You're getting it cheap, but it doesn't mean that that's the price that it's going to. Because if we have a recession, things can change, and things can change quicker than you actually believe. Okay, so understand where you are. I believe in Jenny here. The first 3, okay, this is the S&P just dropped 10% in 2 days. Just the 4th time since 1952. And we can see this. November, March, April. These are different log scale. So the first 3 were all incredible buying opportunity. Odds favor the 4th. With the caveat that my gut says Friday isn't the bottom and the S&P could get lower, assuming a $250 earnings. Again, this is key. Assuming a $250 earnings, 20 times, which is still too rich, but 100% for sure, some bargain basement opportunities. This will create your portfolio for the next 10 years. Remember, you're currently estimated to have $280 earnings on the S&P. It's going to be revised down. She's saying 250. I'm reading maybe 235. The estimates right now are 250. After the drop last week, you're trading at 20 times forward earnings. That's PE. Okay, I'm going to throw some numbers out there. Many think the tariffs will push the earnings down to $235. Add in an additional reduction to 235 plus the multiple going down from 15 to 18, you have a significant downside still to go. If that's the case, if market manipulators with big money think that that's where we're going to go, that's where they're going to take it. So you have quite a bit lower to go. This will be your chance to buy some great companies at a very discounted rate. If Apple were to come down to a PE of 15, the stock would be at 100. It's at 182 right now. More than likely, it's not coming down to a PE of 15. But if it does, would you buy it? That's the question. And here's a trading idea for you, because this is going to get crazy. The mental capacity of people is to go and gamble at times like this. But I want you to avoid that, because statistics have told us the more you trade, the less returns you have in the long run. It's not absolute. Understand, that is the law of averages. And if you beat the averages, I give you a high five. But if you don't beat the averages, then you could be setting yourself up for extreme failure. So what I want to take you back to is when I started trading. You think you've got a great trade idea, okay? I want you to do this. Add $50 to your trade into VOO or QQQ, whichever one you want, but you can never sell it. $50 on the buy and $50 on the sell. If your trade idea is that good, then that $50 is nothing. Nothing. But again, I urge you to avoid trading, start your own commission program, and it will pay you back by just buying and holding. And a $50 commission shouldn't sway you away from a great trade. That makes sure that your mind is on A+ setups and you're not just gambling. The more you trade, the less successful over time you are. It's a statistic. It's not an opinion, and it's not absolute. You could absolutely be the exception to the rule. But the process of paying yourself a commission and buying VOO or QQQ and just never selling it, that sets you up to actually be good at trading, because there's a mental stoppage when you have to pay a fee that I learned when I was younger. You young folks, you don't know the rejection of having to call a girl on a phone or having to show up and ring her doorbell. And that's the first time you ask her out or you ask her if she likes you. You have no freaking idea what that kind of rejection is like, because you grew up being able to swipe left or swipe right or DM somebody in their DMs, and you just avoided rejection. That's what the commission plan is for. It's to get you into the mental capacity that, hey, if I think this is going to make me money, I am going to go in and pay myself a commission. Okay? Bonus for anybody who was around during 1987. The circuit breakers have triggered in Japan. This is what led Black Monday. And they have triggered all over the world. Okay? And if you want to know what 1987 was like, this is news coverage. You should watch this. Because if you don't remember what this was actually like, okay, you're hearing people on the trading floor. Remember, it was 1987. I had started trading in 1985. I had to pay $50 commission, and you had to call somebody on the phone. And you didn't know what the market was doing because there was no CNBC. I didn't have cable TV. You know, you had news, and they were breaking in with news coverage. But this is a 7-minute report, and you'll see traders going, yeah, it's down 5 points, blah, blah, blah. They're talking trader talk. And you don't hear that anymore, because what do you hear? You hear people on Twitter and stuff. But go and watch this. It's a good one. And I'd urge you, again, I think was Cooperman, Leon Cooperman said it best. Just be careful. And make sure, just like a plumber, just like an electrician, you have tools in your pocket. And if you fall into one of those decades that I just went over as what I did, and again, none of this is financial advice. I could be completely wrong, and the market could turn around here in the pre-market. It doesn't look like it is, but I expect when these doors open at 9:30, it's 9:27 right now, it's getting worse. It's not getting better. I expect this to be a crazy day. Okay? Right here. We'll go 5-minute and we'll go pre-market. Does that look like it's getting better? Is that a chart that you would buy? I mean, forget that it's a 5-minute time frame, but is that a chart that you would buy right now? Wait for an opportunity. Again, the commission plan is just an idea. You take it for what it's worth. None of this, everything that I say, the entire podcast is about my morning routine. And my morning routine is more based on selling right now than it is buying. Now, I may be the boomer in the room because I'm 50 years old, but that's the way I feel. And again, to point it out, that your political bias may be where you feel, because if you are a Trumper, and there were several comments about, trusting Elon and Trump, Elon's telling you, douchebag, get to zero trade, zero tariffs, not deficits. So again, understand that this is different. They are working to actually destroy wealth. And they are not doing it for any nefarious reason. They think they're doing good. But if you're one of those people who took a European vacation, or, who can't afford to lose another 20% of their portfolio, make sure you're putting it in places. You can look for, we can go and look for correction deniers. Correction deniers by Trendspider. We can go and look at it, and we can look at it in the 4-hour algorithm. There are plenty of stocks that are still going up. Albertsons, okay, that's still on an upward trend. Duke Energy, that's still on an upward trend. Cigna Group, that's still on an upward trend. Republic Services, that's still on an upward trend. There are plenty of stocks that are still on an upward trend. Right now, there is no green in any of these correction deniers, though. Nothing. So find stocks. If we go over to FinViz, I think it was Patty who asked me, hey, is there anything trading over its 200-day? Sure. You can look at, let's go look in the S&P 500. And we'll look at technicals here on FinViz. This is a free tool that you should be using. Is there anything trading above its 20-day? Sure, there's 29 stocks. American Tower Group. Let's go over and look at it in a chart. Is this one you want to bet on? Look at that. I mean, if you got in at 189, 217, and it passed earnings, and what does it look like on a weekly? On a weekly chart here, the market just opened, so this is going to be a little bit slow because it's painting on the chart. Let's go to the 4-hour, and we'll run this one, and then we'll look at American Tower weekly. The market just opened, so everything's going to be reset here on Trendspider. It's going to be a little bit slow because this one's still doing a little bit. There we go, American Tower. Sorry, I interrupted my flow. But American Tower is just at its 200-day on the weekly. The 4-hour algorithm makes you 23%, and that's not including the great dividend. Because American Tower, I think it's got like a 4% dividend. Let's see. American Tower yield, 3.09. So, but it's down today, hitting resistance at that one. Here's the correction dive. COR, MOH, Molina Healthcare. This one has been flying. 320 you could have bought in it. That was just on March 27th. So again, there are opportunities out there, but it doesn't mean you go into them just blindly. We're looking at Apple now at 177. You've got gaps all the way down. They will get filled. At some point in time, they will get filled. And if you go to a weekly, Apple is just way oversold. It's right at its 200-day on the weekly. When's the last time it was even near its 200-day on the weekly? Back here, 2019. It didn't even touch the 200-day during COVID. So again, my buddy and I, Steve, developed the 4-hour algorithm. It has helped me. If these types of things would help you, I'd urge you, get a charting tool. It doesn't have to be Trendspider. If you like Trendspider and you see the way I use it, then maybe it's something for you. And again, if you've got $5,000 in your account, do not go and spend money on Trendspider. It's $655 for the next 12 months. Only get this if you can afford it. Because right now you're probably losing more than $655. And the question is, can a chart and a 4-hour algorithm or any strategy save you from the downside? It might. It has saved me plenty of money over the last 5 years. I remember I was a paying customer before I was actually an affiliate. So if you have any questions, again, sign up for the newsletter. Let us help you grow. Sorry for the pop music at the beginning. It should be somber, but it's probably going to be pop. And again, if I can do anything for you or help you, I'm not going to give you any financial advice because that's not what I do. I just try and give you the tools to make you help you make your own decisions. Okay. Let's hope we don't have any circuit breakers today. I hope everyone survives. I hope you will be okay. Just be careful. It is a buying opportunity. It's just not about timing the bottom. It depends on what your time frame is. Look back 20 years. Look back 30 years. You will be okay. Okay, take care. See you. Bye.
Every morning I wake up to the sound of the trading bell.